Welcome back to Talk Property to Me. My name is Brad East, and today I have Toby Woodroffe here he's a mortgage broker that's also working with me here at Wise Buy Home Loans. Today we're going to be discussing, all things mortgage brokers and, in my opinion, why you should be going to a broker instead of going directly to a bank. So thanks for joining me, Toby.
Good to be here.
All right, man, a few words already. Let's see if we can get some more out of him by the end of this episode. So I'm going to start with, over the last week or two, there was some articles put out, 3, I believe, by a lady named Karen, believe it or not, on the Australian Financial Review. So essentially a financial publication. Now, these articles that were put out were so far from the truth. It was like we went back in time to pre-Royal Commission when mortgage brokers were, the enemy of the banks. And the way I see it, Karen has been fed a little bit of crap, if you want to call it that, from some people, and she just didn't have a clue what mortgage brokers do and didn't have a clue, where mortgage brokers sit in the market. So one of the lines in there was that the average mortgage broker has a personal income of $600,000 per year and goes on all these lavish lunches and lives the dream. I can assure you, as a mortgage broker of 10 years, that is not the case. I wish it was. The average, sorry to hit Karen with some actual real numbers here, but the actual average earnings for a mortgage broker business is $189,000 per annum. Now, that doesn't take into consideration business costs, staff, all those things that pop up into it. So all of a sudden, the personal income of a mortgage broker is around $50K. So the purpose of this podcast, what it really identified to me is that there's still a lot of, misinformation and poor education out there in the market as to what mortgage brokers actually do and how we help our clients. Another thing that was put in there that was absolute nonsense was that if you got a $1 million loan, you better be prepared to pay $14,000 worth of fees for getting a broker to write that loan for you. So just wanted to clear that up, that lenders pay brokers a commission separate to the loan amount, separate to the rate. It does not affect the rate, does not affect the amount that you pay back. It is a cost of sale to them. It's like going in and seeing Kathy at the branch. There's a cost of sale there. They've got the rent, they've got Kathy's wage, her superannuation, all these things, the bonuses that she doesn't have to declare to you, all these things that add to that. Now, brokers, if a loan's written through a broker, they don't have to pay those fees to Kathy, essentially. So that's where it comes in. It isn't added to your loan. That's absolute nonsense. Now, Toby, are you able to give us a bit of a rundown on your opinion as to why these articles were written?
Yeah, I think it's because the bank's profits on the interest margins have actually decreased over the last 12 months.
Yeah. So basically what that is, so the interest margin is basically the difference between what a lender buys their money for and what they sell it for. Now, the higher that margin, the more profit a bank makes. And what I think since the 90s, when brokers started in this industry, or started in Australia essentially, that net interest margin has decreased substantially, like a ridiculous amount. Now, that number, or that net interest margin, keeps going down each year. Now, that, if you actually look at the scale of market share, so currently brokers are writing around 74%. That's the latest number that came out the other week. So 74% of mortgages are written through a broker at the moment, and the balance go directly to a bank. Now, if you look at the scale, as the percentage of broker-originated loans goes up, the net profit margin, or net interest margin, decreases at a steady rate as well. So what that's saying is that as more and more people are using mortgage brokers, more and more people are saving on their home loans and reducing the profits of the banks.
Because the brokers are doing what their job is to do.
Correct.
That's to get a better deal for the lender.
Yeah. So if you're doing it right, that's exactly what we're doing. So better deal for the client.
Yeah.
Better not stuff the lender. But so I guess essentially, that is what we do. Now, another way that banks make their money is based on, so let's say you had a loan approved right now. What the lenders do to sort of, I guess, do a bit of smoke and mirrors to make money off you, they will have an advertised rate. So let's say that rate at the moment is 6.14%. They have a standard variable rate of 8.8% as an example. Now, to get to that 6.14 or whatever it's going to be, they put a discount in place. So they'll put a discount of 2.5% or whatever it's going to be, and it makes that rate lower at 6.14. Now, what they do to make money off you long term is they decrease that discount as you stay with them. Like the longer you stay with them, the more they rip you off.
Yeah.
It's as simple as that.
Yeah, as you progress through your loan, your rate substantially gets higher and higher.
Correct. And they because they're not actually increasing your interest rate, they haven't adjusted their like it's smoke and mirrors because they're actually reducing your discount. So they're able to do so without, too much carry on.
Yeah, technically the rate's not changing at all.
Correct.
Yeah.
Their rate is still 8.8%. We have done nothing wrong.
Yeah.
So that's how they justify that. So all they'll do is put it on the, hide it in the statement somewhere. Your discount has been reduced from 2.64 to 2.6. Bang. There's a little bit of money.
Here's your new repayment.
Correct. So most people, nine times out of 10, most people don't, they don't notice. It's not something that you check. Like I literally can't remember the last time and I'm a mortgage broker, I can't remember the last time I got my physical or even electronic statement out and looked at that and went through it.
No, I get the email saying it's available and I just, move it.
You don't check it. It's not something I have ever literally sat down. It's probably something I should. But what brokers do as a service, and I should probably do this to myself, is every 6 months or so, we go back to that lender and we do what's called pricing. So that is readjusting that discount, making sure that you are on the cheapest rate. Now, there's no secret then when you think about all these things that brokers are doing, there is no secret why the big four banks don't like brokers.
Yeah, for sure.
Have you got any numbers? Have you got some numbers on their net profits?
Yeah, so I got numbers on from the start of the year till now, the last 6 months. CBA, NAB, ANZ and Westpac have a combined profit of $15 billion after tax.
And this is as of for this calendar year.
Yep.
So let that sink in. This is not gross revenue. This is $15 billion in profit.
Yeah. After tax in 6 months.
Yeah, they probably paid no tax. Let's not get into the conspiracy theory there, but so these are literally $1 billion of profit per annum, and their net interest margins are being reduced slightly, and they come after brokers.
Yeah,
you pricks. So I guess it's something to consider. There is another thing that I'll touch on as well. After I think the Royal Commission into the banking sector was in 2018. As part of that Royal Commission, if there's anyone out there that wasn't, I guess, looking at it at the time I was a broker. So basically the intent of the Royal Commission in 2018 was to look at misconduct by the banking sector. There was literally lenders out there that were charging insurance premiums to dead people. They were, the conduct was disgusting.
Yeah, it's criminal.
Absolutely disgusting. So the government went, all right, let's have a Royal Commission and then look at the banking sector as a whole and figure out why this is happening. So that all went through. They found, hundreds of thousands of cases of misconduct. And then a couple of lenders basically did like a little bit of a bait and switch. So they just threw mortgage brokers into the light instead. And unfortunately, it actually worked, which is ridiculous. So mortgage brokers have the lowest AFCA complaints, so the lowest ombudsman complaints, yet write 74% of deals, let that sink in again. I think we're less than 1% of AFCA complaints to the Ombudsman comes through a broker. Yet we write 74% of loans. So all of a sudden, Big Four bank, they all sit up on the inquiry and they make out mortgage brokers to be the enemy. They're the guys you should go after. And
everyone believes the mainstream media.
Well, they did. They all jumped on it and went, "Yep, brokers are the issue. Let's regulate them even more than they already are." So that was the birth of what's called the best interest duty or bid. So I don't disagree with it. I actually don't think it's a bad idea having legislation around mortgage brokers having to act in your best interest at all times.
Yeah, for sure.
And prior to that, 99% of brokers already did. Yeah. It wasn't something that all of a sudden we had to change our practices. Consumers are smart. If I'm throwing a rate at them that's higher than what else is advertised in the market, consumers aren't idiots. They're just going to go elsewhere.
Yeah, they'll go to where that rate is.
Correct. So it didn't make much difference, to be honest. It just legislated it. Now, again, if you go to a broker, we have to act in your best interests as per legislation. So that means there's a lot of factors that come into your best interests. How quick does the lender need to be? Have you purchased a house and you need it to settle in a week? Quick and cheap don't go together.
Yeah.
It's unfortunate, but they don't. If you look at a lender, a local, I won't say the brand, but a local Newcastle one, it actually has Newcastle in the name, they're sitting at around 5 weeks for a pre-approval.
Yeah, but they offer probably the lowest
It's one of the lowest rates in the market.
Yeah.
So are you going to go to them if you found a property and you have exchanged and you need it signed off by Friday?
Definitely not.
And it's a Monday. No. You're not. So that's not in your best interest. So all of these factors come into it when you go through a broker. The rate, are you going to get approved there? Sadly enough, I know the policies of, 30-odd lenders, and that's as boring as it sounds, but I do know those. So you go to, again, Kathy, I'm picking on Kathy at the branch, but you go see Kathy at the branch and sit down with her. She has one lender and maybe 3 or 4 products to sit in front of you with.
Yeah, and out of those 3 or 4 products, probably only 1 or 2 even match what you're looking for.
Correct, but they'll shove you in there. They don't care. Yeah. Here you go. This is a really good product for you.
Yeah, so the bank cares about the profits it's going to make, the profits the shareholders are going to make, not your circumstances or what that loan's going to do for you.
When you go to a broker, again, as I said, the average income earning for the business, not for the individual, was about $189,000 per annum. Correct me if I'm wrong, but that's pretty bloody low.
Yeah, for sure.
There's
for the amount of work that brokers put in.
I think the local takeaway down the road would earn a lot more than that. And they make out like it's this big glamorous industry. It isn't. And if you want to challenge me on that, come and work for me for a while.
Yeah.
Go get some leads.
Yeah, for sure. For sure.
Challenge me on that. But the key, I guess if we go after a couple of key points here just to really drum into it, what mortgage brokers do and why these articles were so wrong. We don't charge a cent. Well, most brokers don't charge you a cent. We get paid a commission directly from the lender that you choose. You're in part of that process.
Yeah.
You tell us what you want. We come back to you with 3 or 4 options around, lenders that meet what you've asked for. And we would usually have a recommendation on the back of that as to why we go with that lender and so on. So we don't charge you a cent. We're legislated to act in your best interests. We have access to 60 lenders, not one. Like, it makes 0 sense to me why you'd actually go directly to a branch in this day and age.
Yeah, well, you're getting expert advice for free.
Yeah. And there's little things that, if you think you're going to do it yourself, send me a message on Facebook now and tell me which lenders use 100% of negative gearing to increase your borrowing capacity. Tell me which lenders have a 20% buffer on existing debts instead of using 3% on total.
Or what lenders will take 100% of allowances.
Yeah. So you're going to waste a lot of time, I can guarantee you. And, that's our job. Our job is to make sure that we're getting you the best outcome. And especially in the investing space, your first property or your second property may be pretty easy. as far as lending goes, if you've got good incomes. It's when you want to get to that third or fourth property, you're going to need second-tier lenders that have higher borrowing capacities.
Yeah, for sure. And if you go directly to a bank, they're just going to want to secure your investment to your principal place.
They line them all up. They do what's called cross-collateralization. So one loan over 2 properties or 3 properties or 4, the more the better for them, because they really like to, I guess, manage that risk of a certain market declining. So let's say you had a property in Newcastle and a property in Brisbane and a property in Perth. They would ideally try to link them together, cross-collateralise them, so that if Perth dropped, which is a good chance, or Brisbane dropped, also probably post-Olympics, but if one of those drop, then the Newcastle property is going to prop them up.
Yeah.
They're not going to have to worry about that loss because they've got all 3 lined up together.
Yeah, and you'll also get to a point where the bank won't want to lend you any more money because they say that it's too much of a risk. So you're limiting the amount of properties that you're actually going to buy, even if you can technically afford that.
So I guess in summary, don't read or don't buy into everything that you see in the media. Usually it's full of shit. Make your own inquiries, look out there who's in your local area, who's a mortgage broker, who's got good reviews, who's been in the industry long, who understands it, and reach out. You're going to get much better results and much better long-term relationships dealing with a local broker as opposed to going and trying to do this yourself.
Yeah, for sure. And like one mistake can cost you so much money.
100%. And the bank's not going to explain a lot of that to you, like we've just talked about cross-collateralisation or all those. Kathy down the branch is literally just going to go, here, it's approved. Sign here, happy days, see you later.
And just like the ongoing support from a bank, you get nothing. Once you sign that loan, you're off there to navigate that home loan and the ups and downs of the property market by yourself.
Yeah. And you need an update on something, call our 1300 number.
Yeah, yeah.
You'll be on hold for 45 minutes. But that's it for today. Thanks for listening. As always, jump on the socials, jump in the Facebook group and post any comments or any questions you want us to answer. Thank you.
See you.